What's going on, guys? So today we're going to be talking about Aurora Cannabis and why I think we're seeing some buy signals with Aurora Cannabis. So Aurora Cannabis has had a couple green days and I'm hoping to see a lot more. So we're going to be doing some chart analysis. Also, I'm going to be looking at a bullish and a bearish case for Aurora Cannabis. But before we get this video started, let me know your thoughts on Aurora Cannabis, whether you think we're getting ready for a run or whether we're going to continue to decline even lower. Also, don't forget, give me a thumbs up, hit that notification bell, and smash that subscribe button. And let's get this video started. So first we're going to be looking at Aurora Cannabis charts, and we're going to be looking at the American charts and the Canadian charts. We're going to start off with the American. As you can see, we've had a nice run in the past pretty much all of 2019 and recently started selling off. In 2019 we had a sell-off starting pretty much the beginning of May. So since the beginning of May, Aurora Cannabis has been downtrending. As you can see, we started downtrending here. We hit the $8 support line, had a small little run, and then another downtrend, and we broke below the $8 support line right here. Recently we wanted to go above this $8 support, which seems to now be acting as a resistance line. As you can see right here, we try to go above the $8 previous support line, which is now acting as a resistance, and immediately got rejected, and then we started downtrending again. So now the real question is, are we going to continue to downtrend, or is Aurora Cannabis getting ready for another run and hopefully break above this $8 support line, which is now acting as a resistance line? So we're going to look at the same thing in Canadian dollars, and these charts are pretty much identical. As you can see, Aurora Cannabis had a nice run starting May. We had a small little sell-off. We had a support line right here at around $10.75, had a nice little run, broke below this $10.75 support line, recently tried to go above it, immediately got rejected. The $10.75 support is now acting as a resistance, and the same thing, the question is, are we going to continue to downtrend, or are we going to have a nice run and break above this new resistance line at $10.75. So right now, if you look at the MACD lines, it looks like we're getting a buy signal. Also, if you look at the Bollinger Bands and the 50-day moving average, they might potentially cross, which is also a sign that Aurora is getting ready for a nice run. So I'm going to give you guys an example right here. The MACD lines crossed here. Aurora Cannabis had a nice run. The MACD lines are still crossing here. It looks like they're going to be getting ready for a nice run. Right here, the 50-day moving average and the Bollinger Bands crossed. Aurora Cannabis had a fall. So now that they're getting ready to cross here, they might be getting ready for a nice run. Same with the MACD lines. Right here we had a sell signal. Aurora Cannabis had a sell off. Right here we had a buy signal. Aurora Cannabis started a run, got another buy signal. Hopefully Aurora Cannabis has another nice run. Technical analysis for Aurora is still a sell, and a strong sell. 1 minute, it's a sell, strong sell, and a strong sell. So technical analysis is not looking good for Aurora Cannabis. But right now, when I'm looking at the MACD lines and the Bollinger Bands and the 50-day moving average, it looks like we're having some buy signals. We'll see who's right. I feel right now we're approaching some buy signals, and potentially could mean that Aurora is getting ready for a nice run. In the meantime, we have some more positive news for Aurora Cannabis, which is these combined three major catalysts will send the share price of Aurora Cannabis soaring. So the market doesn't fully understand the potential of recreational pot, CBD, and medical cannabis in the years ahead. So we're going to dive in right into recreational pot. So the most important thing associated with recreational pot is that its legalization in some countries and states has propelled cannabis in general into public consciousness. It does represent a tremendous revenue opportunity for Aurora Cannabis and other companies, especially over the next couple of years, as it's the revenue base allowing for companies to operate while they work on other more profitable and predictable revenue streams. So Aurora Cannabis has a 50-50 split of revenue from recreational pot and medical pot. In contrast, Canopy Growth has about a 75% of its revenue coming from recreational marijuana at this time, which is very important because recreational pot doesn't generate significant margins, which weakens earnings. So if more countries legalize recreational pot, this won't change. With Aurora's market-leading cannabis production, it wants to allocate resources to the most profitable products, and that means it will prioritize CBD and medical cannabis applications over recreational. Once the choice has been made, the choice will be triggered when Canadian recreational demand is met. Next, we're going to talk about CBD business. So probably the most hyped part of the cannabis sector is the CBD segment of the market. Much of that is associated with the potential of the US market. So right now, part of the problem is that the FDA approved CBD as a drug before it started to be marketed as a dietary or food supplement. The two can't be marketed as a supplement and a drug at the same time. That's why interstate commerce is illegal. Aurora's management has stated in the past the CBD market in the US is far from clear, and they aren't in a hurry to aggressively pursue it at this time, which I think is a smart choice, because if Aurora does fully invest into the CBD, and with all the uncertainty going on in the US, they could be wasting a lot of money making products that potentially could still be considered illegal in the United States. So I think it's smart that they want to wait out what's going to happen in the US, wait out for the laws to change for marijuana to one day hopefully be fully recreational in the United States as well, fully legal for recreational purposes in the US as well. So the FDA has clearly stated it will take some time to reach a final decision on the guideline companies marketing CBD can use as a parameters for doing business in the US. So for that reason, the optimistic outlook for CBD sales in the US will have to be lowered in the near term. So next we'll be looking at medical cannabis. So for medical cannabis, finding solutions in the sports medicine market would be a huge breakthrough, which it would explain one of their partnerships with the UFC and a great revenue stream. This is just one of many possibilities available. There's also treatment for PTSD, ALS, chronic pain, Crohn's disease, multiple sclerosis, nausea, vomiting associated with cancer treatments, among others. While these can be treated by cannabis now, companies doing research and learning more effective ways to treat the conditions, going through the approval process like GW Pharmaceuticals has, will be able to enjoy a huge competitive advantage over their peers. Also, another thing they didn't mention was pets, which I know a lot of people do love to talk about. People love their pets, and I do think marijuana, CBD, all these treatments and medicines can be used on pets as well. We're going to dive into the conclusion. As these three segments of the cannabis sector continue to grow, Aurora Cannabis is uniquely positioned to grow along with them. The unique position is the fact that it is rapidly separating itself from all competitors on the production side of business. Not only does it need a lot of cannabis to serve a recreational CBD wellness and medical cannabis markets, there's the need to have varieties of strain and quantity of supply in order to do research and set aside for various other needs. So the way to view Aurora is to understand it will continue to compete in the segments of the cannabis market mentioned in this article, with recreational pot being a major contributor to revenue in the near term, with the CBD wellness and medical sales increasingly becoming a larger percentage of revenue. With Canadian recreational demand not being supplied fully at this time, the company may experience a quarter or two where recreational pot will increase as a percentage of sales, but further out there is no doubt medical cannabis will be the major growth catalyst. But there's always two sides to a coin. So right here we had a pretty positive and bullish article on Aurora Cannabis, and right here as a disclosure they said we are long ACB. So now we're going to look at the dark side, which is pretty much the complete opposite of what this article has to say, which is every popular pot stock is now in a bear market territory. So in many ways the legal marijuana industry is viewed as a once in a generation or perhaps a once in a lifetime growth opportunity, with tens of billions of dollars in sales regularly occurring in the black market. Gradually moving these transactions over to legal channels could produce substantial ripples within the cannabis community and throughout ancillary industries. But all these pie in the sky figures mean absolutely nothing at the moment, with every single popular pot stock right now in bear market territory, down at least 20% from their all-time highs. So here's a brief rundown of how the most popular Canadian marijuana stocks have performed since hitting their all-time highs. So Hexo has been down 25% since their all-time highs. Canopy Growth has been down 32%. Aurora Cannabis down 39%. Kronos is down 42%. Afria is down 62%, and Tilray is down 84%. Among the 6 most popular pot stocks, only Hexo and Chrono have ascended to their new highs at some point in 2019, with the other 4 hitting their highs in either September or October 2018. So here are 5 reasons as to why the cannabis sector is in a bear market right now. So number 1, the Canadian supply chain issue, which is simply that most provinces have not been able to meet demand, and they most likely won't be able to meet demand for the next 1 to 2 years, which doesn't really seem to be the worst problem. But we're going to move on to the next one, which is disappointing operating result. So here's a quick rundown what these 6 popular pot stocks delivered from an operating loss. Hexo, $6.9 million in loss. Canopy Growth, $157.2 million loss. Aurora Cannabis, $77.6 million loss. Kronos, $10.4 million loss. Afria, $89.3 million loss. And Tilray, $27.9 million loss. With only a minimal loss of $6.9 million, perhaps it's no surprise that Hexo is the best of the worst late. On the other hand, the two largest pod stocks in the world by market cap, Canopy and Aurora, and Afria, which wound up taking a hefty write-down, reported substantial operating losses. Since earning reports actually matter now, this isn't the way to get on Wall Street's good side. Number 3, which is persistent share-based dilution. And of course, they're going to talk about Aurora Cannabis has seen its share count balloon from 16 million to 1.01 billion. And I've talked about that many times on this channel. Aurora Cannabis has somewhat been punishing us, the shareholders, by constantly diluting and issuing more shares instead of having cash at hand. Of course, companies like Canopy Growth, Kronos didn't have to do that because they have big money backing them up and they have $1 billion of cash just sitting waiting to be invested. Even here, they talk about share dilution for Canopy Growth, which is Canopy Growth shares count has shot up from around 30 million at the end of 2014 334 million, which isn't as bad as Aurora Cannabis, to be honest, because if Aurora Cannabis went from 16 million to 1 billion, Canopy Growth went from 30 million to 334 billion. Afria went from 58 million shares outstanding by the end of 2015 to now 250 million. So yeah, as you can see right here, out of those three companies, Aurora Cannabis has diluted their shares the most. So we're going to move on to reason number 4, which is shareholder trust issues. So Afria, of course, is one of the examples, has completely lost trust of their shareholders, mostly because that short seller attack, and I've made countless of videos on that issue, which if you want, you could probably dig through my videos and find exactly what happened. And then we're going to move on to the 5th and final reason, which is the natural evolution of next big thing investments. So let's not overlook the fact that the next big thing investment over the past quarter century has gone through a parabolic rally period and a subsequent bubble bursting period. And we can name many examples like the .com bubble, the 3D printer bubble, real estate. They go through a lot of hype, and there's always a few companies that come out on top, and then there's always those companies that just disappear and go bankrupt. This might be what's happening now with the marijuana craze. And it's same thing with crypto. So marijuana stock investors need to understand that choppiness and even bear markets are to be expected as the pot industry matures. Anyways, that's it for Aurora Cannabis. Let me know your thoughts and opinions on Aurora Cannabis. We have the bullish and the bearish case. Are you guys a bull or a bear? Let me know in the comment section. Also, if you guys enjoyed this video, don't forget, give me a thumbs up, hit that notification bell, smash that subscribe button. I'll see you guys on my next video. Bye-bye.